So our market update this week, what I did is I looked at the Calgary Economic Development, and they come out with forecasts every now and then. And their forecast this fall, they predicted that Calgary is going to end up with 5% growth, or the GDP growth in Alberta, not Calgary, is going to be 5% for 2022, and they're predicting 3% for 2023. So what we're seeing with that is there's still going to be strong demand for housing all the way through 2023 in Alberta. We can't speak to the larger centers like Toronto and Vancouver because there's already talk of them seeing up to a 20% decrease in their pricing levels. But what we see in Alberta here is because our economy is so strong, we're going to see growth throughout the year.
Yeah, and a couple of factors there. One is migration, definitely. We had 432,000 people move to Canada last year, and I don't know the exact percentage. Oh, we know roughly it was around 50,000 people moved to Calgary alone. So, and they're predicting even more. So just that, people moving here, and we're seeing this from Vancouver, from BC, from Ontario, and then you couple that with supply levels right now, we're at an all-time low. When we say all-time low, I was looking at the numbers this morning, and we have 1,936 active listings in Calgary right now, and out of that 1,936 listings, only 1,100 of those are detached homes. So there is nothing to buy. Like we've never been in this situation before.
No, we're actually sitting in a holding pattern. We have lots and lots of clients that are looking in all different categories of the housing market. Some are looking for townhomes, some are looking for condos, some are looking for suite of properties, some are looking for luxury homes. And there's really very, very little inventory out there, and they have very little choice. So a lot of them are just sitting on the sidelines, waiting until that inventory starts to build up in the end of January and February.
And the main reason why we know Calgary is going to take off, I mean, Tim has some great graphs tonight that we're going to showcase to you guys, but the main reason is when the properties do come on the market right now, guess what? They're going into competing offers, and we're not getting them because they're going way over the price we want to pay for them.
Yeah, and we've got, when we talk about certain communities within Calgary and just outside of Calgary, there's some very, very interesting numbers we're going to dig into. A lot of that, some of them, as I was talking about the competing offers, some of them were going through that from January right through to December. So they never stopped with the competing offers. Some communities are so desirable in Calgary. We'll show you some of those, but there are pockets that we still find great investment properties, great cash flowing investment properties for our clients. And that's what we're waiting to come on the market.
Awesome. So that is our market update for January.
Yeah. So what we'll do now is we'll bring Danielle DeMarco. She's our mortgage expert. We talked about her earlier. She's the one that develops a real estate investment plan for the clients once they go and meet her. And Danielle, why don't you take it away with your market update right now?
Sounds great. Thank you guys for the intro. So first week back into seminars in January. So we figured we would do kind of a quick market update on interest rates to see where we're at, where we were, where we think we're headed. So right now, I do have some good news. Fixed rates have come down. They actually started coming down in the beginning of December, and we've seen them stay low, and we're now at January 10th. So what this means, there's a couple of things. Obviously, lower interest rates means better payments, better cash flow. But the second thing is actually qualifying. And a lot of people don't really think about this, but as interest rates come down, that stress test rate that you're required to qualify at all across Canada also comes down. So when we've seen rates come down from that high 5% range in that November down to now the mid to high 4% range, you're talking about a 1% plus decrease in rate. That translates to a 1% plus decrease in the stress test rate. So what that means is that, you can qualify for more now than you could maybe in November. So for anybody who is house hunting, who was pre-approved kind of pre-December, you're really going to want to get yourself pre-approved to kind of see, okay, now that rates have come down, what can I spend? And especially, for a long while there, we were actually pre-approving clients on variable rates because the fixed rates were higher than the variable. we've seen that flip, and the fixed rates are now lower than variable. So again, flipping from a variable pre-approval to a fixed rate pre-approval is actually going to help you be able to qualify for more. So when Tim and Azad are talking about, multiple offers or house prices and things like that, the lower the rate, the more you can spend. So it kind of translates into a little bit more success in offers, but also giving you more options in what you can look at as far as property prices go. So that's something that's really good news right now. I do have to preface that with, or I have to follow that, sorry, with the fact that bond yields have been rising the last couple of weeks. So we do think that this low fixed rate is not going to be a long-term thing. It's going to be kind of a shorter term thing. So again, getting pre-approved, but with a rate hold attached to it right now is actually going to lock in a lower rate for you for about 4 months. So it gives you time to house hunt. If you don't lock in a rate and you start to go house hunting, again, you might qualify for less in 2 weeks if rates go up. So pre-approval with a rate hold is actually really critical right now. It's actually going to save a lot of headaches for a lot of home buyers who are out house hunting. Now, how does this compare to last year? So last year, we really started to see rates rise in March and go from kind of that high 2% range all the way up to the high 5% range, like I said, as of November. So we went from high 2s, we went up about over 3% on the fixed side of things to high 5s. And then in December again, and now we're down to that mid to high 4s. So it's been kind of a little bit of a roller coaster. Rates have definitely more than doubled though in this last year on the fixed side of things. And then we saw prime rates. So the prime rate go from about 2.7 to 6, almost 6.5. So again, about a 4% increase on the variable side of things. So that's why, again, it's so important to be updating your pre-approval, because as the prime lending rate increases, the stress test increases, therefore the amount you can spend decreases. So again, it all kind of plays together. So it's really important when you're investing in real estate and you're out house hunting or you're looking at cash flow, that you're constantly updating your numbers with where rates are at, because that's going to help you figure out your more accurate cash flow and what you can spend. And so what did this do? This meant on average from 2021 to 2022 and where we're at now, it was about $140,000 difference. So anybody that held off on purchasing can actually spend about $140,000 less than they could back in 2021 after this last tumultuous year. So again, it goes to show that trying to time the market when you're an investor isn't necessarily going to work. Lowest rates can't be the most important focus, because then what happens is you end up missing out on qualifying like we saw this last year, or missing out on, house prices going up, or certain markets being supply and demand and causing issues with being able to write offers. So getting into the market is kind of critical. Trying to time it isn't really going to work. So, if you see a property and rates are reasonable, then it's time to get in. We can always redo mortgages down the road and lower rates as rates come down. There's flexibility and things that we can do with that. So try not to stay focused on that interest rate so much when you're deciding when to purchase. And where are they going? So we are likely going to see the prime lending rate increase 1 or 2 more times this year in 2023. The Bank of Canada meets at the end of January here, and we are expecting about a 0.25% increase. Some are saying 0.5%. I would like to think it's going to be just a quarter, and then hopefully they'll sit tight for a few months, kind of see what happens to inflation before they decide, are they going to do another increase or not? But we are expecting variable rates to go up again this year. Same thing, like I said, bond yields are on the rise, so fixed rates are likely to increase again a little bit as well. But the common consensus seems to be that 2024 is when we're going to see rates start to come down again. So I do want to say, with that in mind, that there's a couple different kinds of rates and lenders. So when we're talking about major banks, those rates tend to actually be higher than trust companies. So when they're out there and these economists are saying rates are going to come down, they're referring to those 5 major banks, the bigger banks. So when we're talking about rates coming down, or the economists are talking about rates coming down, you need to keep in mind they are talking about bank rates, which are already at a higher starting point. So when we're seeing these mid to high 4% range rates right now from trust companies, I have a feeling that next year when we start to see rates come down, we're kind of going to settle where we're at right now, but the banks will be settling there as well, not just the trust companies, because the banks are still over 5% for interest rates. So on the fixed side of things, I think 2024, we'll see them come down mid to high 4% range, but likely not lower than that mid 4% range. And then as far as variable rates go, like I said, prime rate's going to go up 2023. But in 2024, again, depending on what inflation looks like, we're hoping that they're going to start to ease on that prime lending rate. I'm not sure if we're going to see any major decreases in the prime lending rate, but we should definitely see some stability with hopefully no more increases in 2024. And kind of to recap, some takeaway points are get pre-approved, because right now, if you can lock in a rate, you might actually be able to spend more now than you could have even in November. The rate holds are critical, and don't try and time the market. We are kind of in that sweet spot. I know Tim and Azad mentioned supply is a little bit low. If something pops up, you really need to be ready to jump on it. And that's being properly pre-approved, having everything ready to go, because these properties that are going really quickly, I had a client yesterday wanted to go look at a property. Realtor went to take them out today, and it was already sold by the time they went to go get there. So, things are moving quickly if it's a good property. So you need to be ready. You need to be prepared so that you can be successful in an offer. Because like Tim and Azad said, when those right ones come along and they do that cash flow analysis, if it looks good, you're going to want to get in because supply is low. So those are kind of the key takeaways, I would say, as far as the market goes and getting yourself ready. And that's it for the market update today.
Thanks, Danielle. So any of you who want Danielle's contact info, she'll put them in the chat. And if you want to speak to her about if you need a refi, or if you're looking to get qualified to buy a rental property, by all means, drop her a line. She'll be able to help you out.
Awesome. Thanks, Danielle.